Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Jun-sok, professor of economics at the Catholic University of Korea. Professor Young, good afternoon. Thanks for making time today.
Happy to be here.
Well, U.S. stocks have just wrapped up their best month since 2020. Apple and Amazon beating expectations with their earnings. Their shares up more than 3% and 10% respectively. Shares of ExxonMobil and Chevron also up quite a bit. What's the story in the global markets as we start a new week?
Okay, well, on Friday, all three major U.S. indices went up between 0.97% to 1.88%. For the week, Dow went up by 1%, S&P by 1.4%, and NASDAQ by 1.9%. The market seems to be shrugging off the negative second quarter GDP growth and 0.75 percentage point rise in interest rates. Maybe it had been expected, so maybe it has been configured into the market, but still, the way that they're shrugging off these factors are actually a bit surprising. PCE inflation, the personal consumption expenditure inflation, the inflation figure that the Fed looks at, rose by 1.0% in June. Core rose by 0.6% in June. It does seem like the PCE inflation is accelerating. We've gotten some hint of this from the consumer price index figures that came out earlier in the month, but also the PCE releases show that disposable personal income has risen by nominal terms in monetary terms, but fallen by real terms by 0.3%, and the spending also has risen. It went up quite a bit on a nominal basis, but only about 0.1% in purchasing power real terms. Today, the consumer sentiment figures are also shown. It's 51.5 for July. It's up slightly from last month. And today's or Friday's stock market was based on growth in surprisingly big tech and energy firms. Amazon had better than expected earnings, so it went up by 10.4%. Apple and AMD also had better than expected earnings. Oil companies, Chevron and Exxon, did very well, but retail firms and firms which went up during the pandemic, Walmart, did not do very well. So it does seem like the feeling is that consumer spending will fall in the near future. The European markets, the DAX, CAC, and FTSE all rose on Friday. It was the best month since November 2020, like the United States. They had better than expected GDP growth for the second quarter, 0.7%. It exceeded the expectations of 0.2%. And Friday's market, again, it was led by energy. Asia, Friday, all three major indices, Nikkei, Shanghai, and Hang Seng, fell. But today, all three major indices were up. But China, there seems to be some concern about possible further slowdowns in the future. The Chinese government is now saying that they are no longer committed to having expansionary fiscal and monetary policies, as they're trying to work out uncompleted construction projects, which are very important to the domestic economy. And they also seem to be concerned about further lockdowns and shutdowns following their zero COVID policies.
Right. We'll try to get back to China in a minute. Here in Korea, the main stock index, the KOSPI, was up and down today, closing just about flat. Weakness in the big names, Samsung, SK hynix, LG Energy Solution. Foreigners been buying again the last few sessions, though. There was a moderate gain on the KOSDAQ. Tell us about the domestic market.
Okay, well, last week, Korea had a positive second quarter growth, unlike the United States. We had a growth of 0.7%, which was driven by, surprisingly, rise in consumption. Exports actually fell by 3.1%, but consumption rose by 3.0%, led by services. Manufacturing fell by 1.1%, so Korea is having a mixed performance there, but I think the optimism won out in the end. Last week, KOSPI rose by 2.4%, KOSDAQ rose by 1.8%, won appreciated by about minus 1.1%. We had a trade figure numbers coming out. Korea is in a trade deficit of $4.7 billion US dollars, but the market seems to be shrugging that off, perhaps because, as mentioned in the previous story, the Bank of Korea, the president of Bank of Korea has said that increases in steps of 0.25 percentage points is desirable for the remainder of the year. So that seems to be signaling that unless there's a big change, we will not have further big steps in interest rate increases until the end of the year, and especially when the Monetary Policy Committee meets on August 25th. KOSPI rose by 0.03% today and ended at 2,452.25. Individuals and foreigners bought, institutions sold. KOSDAQ went up by 0.5% and ended at 807.61. Individuals and institutions sold, foreigners bought. And the KOSDAQ and KOSPI market seems to be doing fairly well.
Right. Well, in China, data show, as you mentioned, factory activity down last month, widespread expectations that growth could fall short of the target in China, even with the end of lockdowns in some major regions. That continues to be the case. What do you see happening in China?
Okay, well, this new round of pessimism is due to the as you mentioned, Purchasing Managers Index, which is a survey of managers responsible for purchasing supplies needed by factories. And because you need to order parts, intermediate parts, and so on, this Purchasing Managers Index is usually looked up as a forward indicator of future production activity. And in China, they have official government PMI and private PMI. The government PMI came in at below 50, which means that they expect a decline. The civilian PMI came in at 50.4. That's below the expectation of 51.5. So there is some expectation that there will be a slowdown in the future. Why is that? Well, there's, I think, 5 major reasons. First, there may be further shutdowns and lockdowns due to the zero corona policy. Second, slowdown in domestic construction, which domestic construction takes a sizable part of domestic demand in China. So if construction falls significantly, that may lead to a slowdown in the economy, even a recession. Third, there's a problem in domestic financial sector due to debt. It's a long-running problem dealing with state-owned enterprises and the construction sector, and there is concern that this may be coming up as a more serious problem as the global interest rate rises. Fourth, there's a question on how well exports are going to do this year, especially if the global economy gets into a slowdown or a recession. And finally, as I mentioned before, there is some worries that the government will no longer commit to an expansionary fiscal and monetary policy. They mentioned the government had said that they will have an expansionary policy just a few weeks ago, but now they seem to be stepping back away from that. So the Chinese government may not be as concerned about keeping the 5.5 growth projection that they made earlier in the year. Most people think that 5.5% is now just impossible to reach. So Chinese government may be just concentrating on making the growth as fast as possible, even if it's not 5.5. And they may have just decided that because they no longer need to hit the target, they no longer need to have such a large expansionary policy.
Well, that makes sense. We'll keep an eye on all of that, Professor, with your help. We'll have to leave it there for today. Thank you, as always, for coming on the program. Appreciate your insights.
Thank you.